Me and you right on time, huh?
Oh, yeah, look at that. How are you?
Wow, we got it. Good, good. How are you doing?
Not too bad.
This is our last lecture, huh?
This is it. Yeah.
Unless we want to do some special thing before the end of the week, but I think we'll get you ready for the test. And
Okay.
we have the test on 7, 8, and 9 coming up on May 1st. And then it's a couple of days later, it looks like, where you're getting a comprehensive exam, huh?
Yep.
Okay, I have an idea here. I'm going to go over highlights
Okay.
that class hint, you should know for the test, okay? Now, hold on one second here. Gotta hit escape here. Okay. Let me bring this up. Somehow I lost it, but we'll find it again very quickly. Yeah, you're taking exam, chapter 7, 8, 9. It's available until May 1st. It says due April 28th, but it's not available until May 1st. So you guys are gonna have to work that out.
All right.
We'll figure it out.
Yeah.
Okay. I'm just going to mention a couple of things that you're likely to see on the test, okay? And I thought perhaps if you had any questions on it, I've got all the PowerPoints lined up to answer any questions or do some descriptions for you, okay? Understand what you're doing with the petty cash, okay? Petty cash. You have any questions on the petty cash? You know how you open it? With what journal entry opens it?
Nope, I am good with that.
Okay. For the rest of the class, petty cash, you debit petty cash and you credit cash. They're two different accounts. They are two different accounts. Know about the different types of signings of checks, okay? The restrictive endorsement and, things like that. There'll be some adjusting journal entries from the bank statement. Which side of the bank statement do you need journal entries? The bank side or the company side? When I say the company side, well, we're picking up things from the bank statement. Yeah, okay. Remember the bank statement?
Yes.
The bank reconciliation, rather, I should say.
Right.
Yeah, you have the one side that's easy. That's the bank balance plus deposits in transit minus outstanding checks. Then the other side, you'll have the general ledger balance plus bank fees minus that type of thing. So my question is, which side do you do journal entries and which side are no journal entries?
Oh, the book side.
The book side, class. That for some reason students tend to draw a blank on that for some reason. And I'm just looking through. Yeah, petty cash you're going to need. And don't forget the amazing change fund. You remember that? The cash register money? You walk into
the short and over?
Yeah, the short and over on the cash register. Okay. You come to work, there's $200 already sitting in there. You look at the cash register tape at the end of the day, and you should have $1,100 there, but you only have $1,090. Know how to do those journal entries to fix that. The 200 is your change fund. The difference between that and the cash register tape should be the amount of cash you have there. And if it's not, you're going to need an entry to debit or credit, cash, short, or over. And I don't know if you can tell, I'm kind of bouncing back here.
Yeah, that's fine. So on the short and over, the journal entry is when you're short on cash, that is an expense.
Exactly.
And when you're over on cash, it's revenue.
That's right. Use the same account though. It's called cash.
Right.
Over short. I had some bad news for me anyway as a teacher. We're not using these textbooks anymore. starting in fall. We're going to Wiley, and I like these books. And Wiley looks confusing to me. They teach it that there's two separate accounts, one for over, one for short, and I've never seen that before. It just seems like a more complicated book. They kicked my nephew's company out of here. My nephew is a vice president with Pearson Publishing, which is a big one. And all those teachers here hated that book. And he didn't have enough juice to do anything about it, I guess. Okay, hold on here. Yeah, so know your petty cashes and the change funds. I mean, there'll be no surprises on this test, my goodness. Yeah, a lot of questions. There'll be a lot of questions on the bank statement. Do you know the difference between the pay on a check, Lori? Do you know the difference between the payee, the drawee, the endorser, and the drawer? I'm not sure I do.
I have to think about them. It's the drawee and the drawer that confuse me. But the drawee is the bank. The drawer is the person who has the account that's ordering the check.
Is that right?
Is that right?
I don't know. I have to say I'm drawing a blank on that one. So let's see. That's in chapter. Yeah, that's chapter 7, right? Here we go. Yeah, it's something so simple, huh? But
I don't know why those two, the and the E. I get confused with like the leaseor and the leasee as well, but I think
goodness. The drawer is the person. I don't want to make myself look any stupider than I have all semester, so let's just find this. Oh, for heaven's sake. Can you see the screen now, by the way?
Uh-huh.
Okay. Yeah, there's nothing nothing surprising in this here. You know what cash is, internal controls, the checking account, signature card, deposit ticket, the ABA number, the endorsement. Yeah, the different types of endorsements. Boy, in the old days when people had to take their checks to the bank, you had to be so careful not to lose it. And people made the mistake of signing it at their desk. You get to the bank and it fell out of their wallet. You were totally ruined in those days. Restrictive endorsement. Here we go. The drawee is the bank. Is that what you said?
I did. The drawee is the bank. The drawer is the depositor.
Yeah. Yes. Okay. Yeah. Payee. The drawee is the bank. The drawer is the person cashing the check, right? Okay. Well, that turned out to be a little complicated, huh? Steps in preparing a check. I don't think we need to look at that. Check stubs. Let's go over the bank statement a little bit for the benefit of the rest of the class. We're going to take a bank statement. We're going to look at the balance per the bank statement, compare it to the balance of our general ledger, and there will always be differences due to what we call reconciling items. And here is a bank statement, and the balance in this account here is, oops, not letting me blow it up. Uh-oh. Well, I can't blow it up, but the balance is 1748.09. Can you read that, Lori?
More or less. Yeah, I don't need to. I think it's fine.
Yeah, 1748.09. So we're going to take that balance from the bank statement and go through our process of the bank reconciliation. Very, very crucial, the bank reconciliation. If you prepare it in reconciliation and it comes out where the adjusted balances are the same, you give yourself good peace of mind that you have cash under control, at least as far as this goes. If you find out that you have a big difference at the end of the month, that requires immediate investigation. You need to contact, you might have to even contact the bank and see if there's something that they know that you don't. And these are called timing differences. Let's understand deposits in transit. Those are checks that customers wrote. Outstanding checks are checks we wrote, and they're on their way to the bank. We've recorded them. The bank hasn't gotten them yet. Service charges, we'll pull that off the bank statement. An NSF check is a bounced check, huh? And if you're going to write a journal entry for that, you're probably going to debit accounts receivable. You're going to debit accounts receivable because when you received the money, you thought the customer paid you with a good check. So you debited cash and you credited accounts receivable. Now you find that this guy was a bum and you have to reinstate him on accounts receivable and go back and collect again. Steps in preparing the bank statement. Yep, the first two are real key, huh? Identify the deposits in transit and outstanding checks and related errors. I don't like to give out related errors on the test. And identify the other reconciling items that might be there. Compare the bank statement, identify, I'm going to skip this. Identify additional reconciling items. When they say additional reconciling items, they're really talking about things that we find on the bank statement we didn't know about. And here they're giving us a quick example of a bank statement. And I noticed they're not giving us the beginning balance, but they're saying deposit of a check we deposited on the 21st has not been received by the bank, nor are 3 outstanding checks. So we have to get the outstanding check numbers and we must put them into the bank reconciliation as so. Bank balance plus deposits in transit minus outstanding checks. You're done with the bank. That's easy. The other side is not much more difficult. You start with our general ledger balance, and then you look back and you see what is on the bank statement that we don't know. Well, let's see. We made a mistake. We wrote a check for $18.98. This must have been a company with a manual system. They sat down and they wrote out a check in pen, right, Lori? Mm-hmm. But then when they entered it into QuickBooks or whatever, they put it in as 1988. So there's a 90-cent difference there. We found out that we have 90 cents more than we thought we did. The boss, Mr. Maple, made an ATM withdrawal of $100, but never told anybody. At the end of the month, we got the bank statement and we saw that somebody used the ATM and we double checked with the boss, Mr. Maple, and he said, yeah, I used it for this reason. That'll come out as a deduction. Bounce checks and service charges. So looking at the bank reconciliation here, we put it all together and our adjusted bank balance is 52,092.33, and so is the other number. If you did this at the end, say you're a pretty big company, $100 million company, at the end of the month comes and you find you're off by about $60,000. That's something you really have to look at pretty darn quick. You know, you might say, oh, we're off 60,000. Talk to Mary. You know, she's the one who does the cash handling. Oh, Mary quit yesterday. We can't find her. That's the type of thing you're going to run into. Journal entries. Now, please understand that any journal entry emanating from a bank reconciliation has to have a debit or credit to cash. I'll say that one more time. Any bank reconciliation JE has to, by definition, debit or credit cash. No exception to that. And they're just showing you some of the rules here. That 90 cents, we're going to debit cash and increase the AP. We didn't really pay 1988. We paid 1898. Here's the withdrawal. Turns out it was for drawing. So we make that journal entry. And the bounce check goes back into accounts receivable. The bounce check goes back into accounts receivable. And here there was a bank charge of $1.80. We charged that to bank fees expense or bank charges, or in this case, miscellaneous expense. Electronic banking, that's a snoozer. We all know that. Petty cash. Petty cash, you write a check payable to the petty cash custodian. If I make you, Lori, the petty cash custodian, the check will be made out to you, $200, and we're going to debit petty cash and credit cash. So we have a new two cash accounts now on our general ledger. You're going to go to the bank and bust that check up into what you think is appropriate for the bucks, maybe 220s, 610, you know what I mean, 410s, coins and everything. And during the month, people will come to you with receipts or invoices or proof that they incurred a tiny expense on behalf of the company. And rather than make them wait for a check, you just hand them $5, $10, and have them sign a receipt. And then the total of those receipts and the cash in the box must equal, in my example, $200. So your journal entry, petty cash, cash. I mean, this is a typical petty cash voucher. This is something all companies do. I mean, for the most part, anytime you're in an office with multiple people, you really kind of need something like this. And then the petty cash fund is replenished at the end of the period. I'm skipping ahead here to take us to the other journal entry. There are two journal entries with petty cash. One is that simple one, and the other one is going to be a credit to cash, not petty cash, a credit to cash, and then you debit the various expenses you incurred. So take a look here. On your petty cash report, you've accumulated all the charges to automobile expense, postage. Now you record them at the end of the month. There was $188 in vouchers there, which means you should have $12 left in the box, but there was only $11.20 left. So it looks like we're short a tiny amount, 80 cents. Okay, they're not showing us the journal entry for that, but that would simply be miscellaneous expense or something, and cash, believe it or not, huh? The change fund. I really appreciate that many of you in the class, I'm sure, worked in fast food. I couldn't do it. I got fired in 2 days at McDonald's. I got rattled the first day when they put me on making milkshakes, Lori, and I fell behind, and I was, I wasn't very dexterous, if that's the word. The next day, before we got the rush in for lunch, I made about 12 of each flavor in advance and put them into this refrigerator. And I was way ahead. I was keeping up like crazy until customers started bringing them back and banging them on the counter. I put them into a freezer. It wasn't a refrigerator. So that was the end of my career. Actually, I quit. I knew fast food was not for me. But anyway, the change fund, that's how much you have in the cash register when you start the day, $200. So you have to debit change fund one time only when you first open up the cash register, when you first establish it. So you have a debit to petty cash for petty cash and a debit to change fund. And then at the end of the day, let's take a look here. You looked into the cash, and the cash in the drawer was $1,450. You started with $200. So we record that $1,250 as the sales here. It came out even. But what if they're short a little bit at the end of the day or a little bit over? That can happen, not quite a bit, but it happens a little, I would say maybe every day. I don't know. as long as it kind of goes up and down and not a steady flow of losses. But here, you have $1,161 in the cash register, but your tape shows sales of $963. $1,161 in the cash register minus 200. We should have $961. Our sales were $963. So let's see what we have here. We have a $2 difference where we were over. We're over. And that's called cash short or over. And that account is both a revenue and an expense account, depending on if you're a glass half filled kind of person. Here, it's going to be just the opposite. We subtract 200 from the 1015. The cash register tape says we sold $814, and we've got another $1 positive here. And that's pretty much it with chapter 7, huh? Let me go back to my hidden. I'm going to stop sharing here. I don't want to get myself in trouble. Stop share. I refuse to share. What I'm doing is I'm going through the test bank, looking at different things that I'd like you to emphasize. Here's a tough one, Laura. You think you can answer this one? To use an ATM machine, the depositor must have which of the following? A BIN number, a TIN number, a SIN number, or a PIN number?
I'm going to say a PIN number.
That one's coming off the test. I'm not putting that one on. Cash over short. Yeah, journal. Know your journal entries on the cash funds, the petty cash, the different types of endorsements. So that should be pretty easy, that part of it, huh?
Mm-hmm.
Okay. All right, let's talk a little bit about the payroll type things. Now, in chapter 8, we talked about the employees' taxes, not the companies, okay?
Mm-hmm.
So understand that gross pay is the same thing as salaries expense, right?
Mm-hmm.
Your journal entry, think of your pay stub. You're going to debit gross pay, you're going to credit all the withholdings, and you're going to credit cash. Gross pay equals the expense. The withholdings are the monies the company took out for federal tax, state, FICA, Medicare, etc. And cash is your net pay. If you think of it that way, it's a pretty easy journal entry. And let's see what we got here. What kind of stuff can we pull out of here? Here's a good question. No, I don't want to read it to you. I don't want. Okay, I'll paraphrase that later. Here, they're giving you the regular earnings and some withdrawals, and they're asking you to write the journal entry. Annual, any person. Know the difference between an independent contractor and an employee.
Mm-hmm.
That's a very interesting thing. Did we talk about the election where we had a referendum on that, right?
Yes. Mm-hmm.
My vote was in the minority, unfortunately. I'm just kind of looking through here. Yeah, there's a lot of problems we can pull out where they give you the gross pay and the deductions. Have a little bit of knowledge about when the employer must make the payments, Lori. We didn't talk too much about that. It's in the book. It depends on the size of the company. You may have a end of the month. You may have 2 weeks. You may have to do it in 3 days. Not that big a deal. Know the limits, right? I don't mean the numbers, but know the limits, meaning Social Security has a cap on it, right?
Mm-hmm.
In our book, it's 128,400 class. That means as soon as an employee earns that. So if you have an employee who earned $128,000 through week number 10, say, and then the next week they earned another $2,000, you would have to take 128,400, subtract the 128, and only 400 of that week's check is subject to the tax. And that can be a pretty tricky thing when you start fooling with the weeds a little bit.
Mm-hmm.
Yeah, there's nothing that should surprise anybody here. I can drag most of these questions out. Okay. You think you have any questions on the employees' payroll, Lori? Anything?
No, I don't. The other issue with the FICA, there's no cap, right?
Well, FICA encompasses Social Security and Medicare, but Social Security has the cap, 128.4, and the other one no cap. And you don't need to know those numbers. They'll provide those to you. Plus, they're wrong, those numbers. They change every year.
Right. Okay.
So let me share again. I'll go through it a little bit here. Share. Okay, you see the screen, Lori?
Yeah.
Share. Oh, I bet this is why I couldn't blow things up before. I think I needed it in this mode. Okay. We'll just go through this briefly. Payroll record keeping. Know the difference between an employer and a contractor. Contractor's independent. And companies, Uber and Lyft, and those people really got their money's worth when they determined that their drivers are independent contractors. My God, that's going to save Uber millions and millions of dollars and really hurt their drivers. I mean, if you got into an accident, now it's your insurance that has to pay for it. You can't get workers' comp.
Mm-hmm.
No vacation days, huh? Employers versus independent lawyers or contractors, accountants, etc. Employees get a W-2. Independent contractors get a Form 1099. Calculate. I think we know how to calculate earnings. We know time and a half after 40 hours. Hopefully we don't get stuck on calculating time and a half. You multiply the base rate by 1.5. And there's one thing I wanted to see here. If I have my way, I'm going to try to get a couple of these type of questions on converting your monthly salary into an hourly. And companies need to do that all the time because a lot of the benefits are based on hours and payroll systems. For example, you earn $2,600 a month times 12, that equals $31,200. If you all can remember this number, 2080, divide 31,000 by 2080, and that'll give you the hourly rate. 2080 is simply 52 weeks times 40 hours a week. Mm. If any of you get out in the world and you're doing budgeting, that 2080 will be in your brain immediately and forever. And they're just going through the calculation here. Turned it into a week, and then they divided it by 40 again. My way, just one step. Understand what FIC is. FICA is the Federal Insurance Contributions Act, I believe. And it's my pension as an old guy, and it's my health insurance now that you are paying for. Mm-hmm. And future students will be paying for you. Withholding. Yeah, they don't know this day's coming sometime, Lori. Right? W-4, you fill that out when you get there. When you start, no problem there. Wage brackets. I'd like to put a problem or two on the test where I make you go to the table. We'll see. In case you don't understand how to do it, you have an employee who earned $638, we'll say, between these two numbers. And this person is for withholding allowances, married table, 4 allowances. You come down until you find 635, 645. This man has to pay $10 in taxes. Is that right? That seems like a very small number to me. FICA, Social Security and Medicare, the two parts. Don't worry about the percentages, although once you're in the workforce, you'll know them automatically. 6.2% for Social Security, 1.45% for Medicare. Medicare is what you call a flat tax, in that everybody pays the same percentage regardless of income. The Social Security tax is what's called a regressive tax, because the more you pay, the more you make, the less you pay as a percentage. A person who makes
Medicare is what I was thinking of when I said no cap. Yeah, so that makes sense.
Yeah. You make $1 million, you're only paying 6.2% on that 128.4. That's why, to me, it's such a simple solution when people say, oh, Social Security, we're running out of it. Oh, for heaven's sake. Just raise the limit again. Different types of adjustments, voluntary. Here's your journal entry. Class, here's your journal entry to record the week's payroll. You debit not gross pay. You debit salaries and wages expense. You debit withholding for federal income tax, whatever things were taken out. These are liabilities. These are what you credit, and you credit cash for the net pay. Payroll records, payroll register. I don't think that's of great interest. Paycheck, employee earnings records. Yeah, here they're repeating what I've been saying. The payroll register is the source of the journal entries. You get that thing done with ADP or your own in proprietary payroll system. Gross pay debited to wage expense, net pay credited to cash. Everything else is a liability. And there's the journal entry. You debit wages and payables expense. You credit all of these withholdings. They're calling them payables, and they are payables, but the proper word, they should have said something like withholding for employee taxes. And the reason for that is these are not company expenses. This is your money that you're trusting the company is going to turn over to the feds and the state of California. I don't see anything too exciting here. Manual system, payroll, different kinds of methods. Everybody's electronic, right, Lori? I can't imagine any company of any size doing things manually.
No.
Unless you just like to do them or something. Okay, I'm going to stop the share. And we're already up to chapter 9, huh? So I'm going into Mr. Test Bank here. Mr. Test Bank. Now, chapter 9 is where we get into the employer's taxes. Employer's taxes. So let's see what kind of stuff they might have here. And nothing too terribly tough. I'm going to read a question here, Lori. Here's another. This one is even easier than the pinned question. You ready? Employer payroll tax. I'm sorry. Salaries and wages are clearly an insignificant cost of doing business.
Is that a true or false?
Yeah.
Oh, that would be false.
I would hope so. You know, most companies. Yeah. Here's a good type of, now this is the type of question I used to like to put on when I was making up my own test. You might get a question where they say, what is the total cost of an employee? And that's going to be beyond their salaries and wages, because the total cost to the employer includes their share of the Social Security and Medicare taxes, which they match. So let me just share the last thing here. Let me share again. Okay, hold on, share. Zip. And I'm going to blow this thing up because I think that makes a difference. No baking this week, Lori? No?
Nope. Not until the weekend.
There you go. The only baking I did, I bought one of those tubes of chocolate chip cookies, you know, to cut it up into little pieces. I always end up like with a big pizza size thing. They're good though. Now here we go. Chapter 9 is the one that may be a little more demanding, because we have to understand Chapter 8, the only employer expense was the payroll gross pay. Here, we're figuring out what taxes the employer has to pay. And let's keep in mind that the employer has to match dollar for dollar the FICAs, meaning Social Security and Medicare. Whatever came out of the employee's checks comes out of the bank account twice from the employer. Okay. There are only 3 taxes that the employer pays: FICA, which is paid again by both parties, and FUTA and SUTA, federal unemployment tax and state unemployment tax. And the limit for FUTA and SUTA is $7,000. Once the employee earns more than $7,000, the employer is off the hook. FUTA and SUTA do not come out of the employee paycheck. Those 2 taxes are paid only by the employer. So FICA match, FUTA, SUTA, only the employer. So they're making a point here. These taxes add substantially to the cost of having. You can see the screen, right, Lori?
Yep.
Okay. I fell into this trap last week where I talked for 10 minutes, and one of the students said, you know, all we see is a blank screen. That's why I always double check, huh? Social Security is 6.2%, Medicare 1.45%. We don't need to know that, but you will. And here, you're looking at somebody's salary here, okay? Here, let's talk about the limits. Here are the earnings for these people. And Sarah Cadrain is the big moneymaker with this company. She has earned thus far $129,400, okay, coming into here. This one they made a little bit tricky. You see, 129,400, right, Lori? That's how much she made so far. The limit is 128,400. So only that difference is going to be their taxable Social Security. Mm-hmm. And I just want to see something here. 128,400. I'm not sure that 1060. I think it should be 1,000. But the point is, once you hit 128,400, no more. So this woman here, she has very little coming out, not coming out, but the company has to only match the 1060 for Social Security because she hit the limit. Notice everybody in this company has earned 7,000 except the guy on the bottom. Mm-hmm. Look at their unemployment compensation earnings. These are earnings. These are not the taxes. This is the amount of the salary subject to the earnings. This fella here Maybe he just began with the company. After this paycheck, he still has not reached 7,000. So 700 would be his entire 360 would be subject to the tax. I don't think we need to worry here. There's a little note on self-employment tax. This could pop up out of the test bank. It's like rolling the dice with these tests. Self-employment tax, the thing is, if you are self-employed, you have to pay double the Social Security. You're going to have to pay 7.65 times 2 because you're both the employee and the employer, I guess. FUTA, federal unemployment taxes. It is paid only by the company, and the effective rate is 0.006, turning that into a decimal. Remember, class, we have to move the decimal over 2 points to the left to turn it into a decimal. And I have to remind myself, too, when I'm doing these. SUTA rate is 5.4, state unemployment. Companies have no impact on the federal rate. That stays the same throughout the whole country. But the state unemployment tax rate is controllable by the company to some extent. If you have a stable workforce with very little turnover and you're not sending many former employees to collect unemployment, your rates are going to go down. So there's an incentive to keep employees around. On the other hand, if you're like McDonald's, a fast food place where students come and go and may end up collecting unemployment, they would pay higher rates. Employer taxes. Just look at the math. Social Security, you multiply by 0.062, 0.015, 0.006, 0.054. Again, you don't have to know those numbers. I'm more concerned that you put the decimal in the right place before multiplying. If you put the decimal point in the wrong place with the 0.062, you would end up taking $3,658 out of this guy's paycheck. And he or she might notice that, believe me. You make the slightest mistake on a payroll check, that employees know it immediately, right, Lori?
Yeah.
There are two groups of people who really are your auditors to some extent. In payroll, your employees will tell you if you're wrong. Mm-hmm. And if you don't pay your bills in accounts payable, you'll find that out too. Steps needed to prepare journal. Oh my goodness, this is a Rube Gold. You know Rube Goldberg, Lori, when I say that?
It sounds familiar.
He was the engineer, cartoonist in the early part of the 20th century, known for his satirical comics, where he would take the very simplest of things and turn it into a complicated We've all those things were hilarious, like how to light a cigarette. It began with a parrot ringing a bell, and then the vibration, caused the cigarette to come down. You get the idea. Mm-hmm. So I don't think we need to look at that. But look at this journal entry. Look at that journal entry. You are going to debit payroll tax expenses and credit the 3 taxes that the employer has to pay. And then when the time comes to pay, you do just that. And here's what I wanted to look at. The total cost of an employee. You earn $26,000 a year in your job, and you're complaining to the boss that I only make $26,000. Well, the bosses love to shove this in people's face. They go, listen, Bob, you make $26,000, but look at this. We have to pay the same Social Security as you, the same Medicare as you, plus we get nicked for these other 2 things. So you're really earning $28,000 a year. I don't look at it that. Bob would not look at it that way.
No.
I remember those, what they used to call reviews. You'd go for your annual review, Lori. I think those have gotten a little bit passé over the last number of years. And the paradigm now is it's continuous feedback. You know, you don't wait until the end of the year and call someone and say, you stink. You know what I mean? But what I'm getting at, I had my first job with W.R. Grace Company. I was there a year. I was making $12,000 a year. And I really wanted to I was making 10,000, which was not quite 200 a week. And I really wanted to make like $220 a week. That seemed like a nice, reasonable raise. And it was a lot of money to me. And I went to my boss, Murray Weitzer, a very nice guy. And he said, Bob, we're very happy with you. So we're going to give you a raise to $200 a week. And I said, Murray, geez, I don't know if I can live on that, kid. How about 220? I said, for 220, you'll have a very happy employee. He says, 220. He said, okay, I'll give you the 220 a week. He said, just don't tell anybody. And I replied, don't worry, Murray. I'm as ashamed of it as you are. Poor Murray. Employee reporting and responsibilities. I don't think you need to know anything about this, except know that depending on the size of the payroll, you may have to pay the next day. You may have to pay every Wednesday, Friday, etc. Just know that the payment date to the feds and the states can vary. The look back period is where they're looking at your payroll taxes and they say, uh-oh, you haven't been taking enough money out of people's pockets. From this point forward, this employee is no longer married 18. We're changing him to single 0 until he kind of catches up here. That's essentially, we're talking about the look back. Making the deposits. Yeah, look at the journal entry. You just debit the payables and credit the cash. These 3 taxes, of course, go to the federal government, and the other 2, FUTA, SUTA, to the state. Here's the 941. I guess we take a quick look. Not that quick, huh? Just let me show this to you guys in the class. This is the famous 941. And like I said, these were done in by hand for many years. And they're not difficult to do. But they were always a little bit annoying and clunky. You'd get to the end of the month and then, oh, gee, got to do not the end of the month, but the end of the quarter, the 941 would pop up. And you just had to be careful that the numbers you put on there matched your general ledger. And all we're saying here is they ask you on the first line the number of employees and your total gross pay. And then you put down how much federal tax came out and how much of this number was subject to the tax. All of it was multiplying it by 12.4, which is the 6.2 times 2 and the 1.45 times 2. There is the total of your taxes, federal plus FICA, 190802, and then there's a couple of tweaks. And at the end, hopefully that's what you deposited with the federal government. And there's quite often a little bit of a rounding difference that they allow you. If you're off by $1 or so, you can make the payment now or tell them you want a refund on the next quarter, okay? And FUTA, you pay that payable as well. The 940 is just a summary. I'll show you the 940 briefly. Know what the 941 is and what the 941 is. They're pretty much the same thing. The 940, though, is one piece of paper that accumulates all of the W-2s. That's all this is. And it's made out in the same exact way as the 941. Again, you start with total payments to the employees, how much of that was for salaries in excess of 280. And each one of these blocks here are going to equal one of your blocks on your W-2 W-2 at the end of the year. Wage and tech. We all know what the W-2 looks like.
Mm-hmm.
Zoom in. Oh, we get the pesky W-2. Yeah, what's this employee's name? Okay, over here, Kem Icestone. And salaries and wages. You notice that the wages are the same number for Social Security and Medicare. There is no 401k block on here, is there? And I'm pretty sure Lori knows where I'm going. You guys who are out in the workforce, if your company offers a 401k, you would be insane not to contribute to it, especially at your age, you young guys. You want to get in there up to the point where you get the company match, if there is any, up to the max. What I'm getting at, that money's gonna grow like crazy as the years go by, and you'll have a nice cushion someday. But there's another benefit. Let's say you put $500 into the pot every month. Well, that means that was $6,000. That's $6,000 of salary. You don't have to pay the income tax. So there's another tremendous benefit to it. The 401ks are a wonderful plan. They're not as good as the basic pension. I mean, the pension is all company money, and you don't have to put up any money of your own like you do here. Plus, you have to make your own investment choices. But the point is, the 401k is a great way to start saving money for retirement, which may come to you someday. W3, we talked about that. The I-9. The I-9 is a form that you don't file with anybody, but you must keep in case the Department of Homeland Security wants to look at them. It's just proof that you verified a new employee is eligible to work in the United States. You need to show a driver's license and Social Security card, or just a passport, basically. You have those, you're okay. And of course, there's a lot of phony ones going around. And once in a while, the Homeland Security or those awful people, the ICE, might come in and double check things. Last thing, I believe, is workers' compensation. This is totally an employer cost. Employer cost. It's an insurance policy the company must have. It's going to pay for injuries suffered on the job. That's what it's for. The cost of the policy depends on the type of business. I mean, if your job is diffusing bombs, well, that company's going to have a very high workers' comp insurance, because if there's an accident, it's going to be a major thing. If you're working in an office, hopefully the worst thing that happens is a paper cut or something. So the workers' comp insurance rates would be very low. And companies do everything they can to minimize this expense, as you would expect them to. Companies are always training employees in safety procedures. They're encouraging employees to, keep their work areas neat. They have first aid training on there, at the place. So workers' comp. And it's always, I'm going to use the word, it's always a percentage of your estimated payroll, not your actual payroll. Because this is an insurance policy, you have to pay it in advance. It would be nice if a year went by, you didn't have any need for it. That's not how insurance works, unfortunately. So you have to estimate your payroll expense at the end of the year. And here they said it was $420 million. We'll pretend it's a big company. And they paid 420. Now they have the insurance. Well, the actual insurance turned out to be 440. All that means is this company has to write a check for $20 to adjust it. Okay. You have to record more expense and then pay the $20 difference. That's all you do. It can go the other way too. You're going to get a refund of $10 if you're off. Now, if you're way, way off, that's a big problem. That's a way, way off. If you're way off, I believe you need to call the workers' comp carrier and say, look, I have to be honest with you here. We just added a second and third shift to our company. So the payroll is going to be way, way out of whack. And I think you would have a shot at adjusting it mid period. And that's about it. So I think that was a pretty decent review, huh? 7, 8, 9. This test should be very, very easy, really. And I would hope there'd be no trouble. You have any questions there, Lori?
Nope. I think I'm looking back over tests, all of my mistakes have been just reading the questions too fast. So
absolutely.
It's always a reminder to just slow down, read them through, and just take my time.
I do that when I'm in the classroom. I do that once in a while, like we all do.
Mm-hmm.
And one day in my financial accounting class, I kept saying coupon rate when it was supposed to be market rates.
Mm.
And I said coupon rate. And a couple of people in the class, but shouldn't that be market rate? I said, no, coupon. And I kept saying coupon rate, and they kept correcting me. And I was getting a little frustrated. And at one point I said, who's the professor here? Of course, they were right. So the point is, you got to read the problem. So,
yeah.
All right, Lori. Well, you have a good week, huh?
Yeah, thanks. So this is it, our last lecture. Yeah.
Yeah, you can always come to tutoring to say goodbye or ask questions or whatever. But yeah, great having you in the class. Same with everybody else.
Pleasure. Yeah.
Are you taking 230?
Not over the summer. If I do, it would be in the fall.
Yeah, so hopefully we should be back on campus. Thank God at that time.
Yeah. I actually do prefer in person versus the Zoom learning, but it's I'm making the adjustment. So
it is what it is.
It is what it is. Yeah.
Okay, you take care, Lori. Bye-bye.
Thank you.